is knowing which sub-asset classes to be in. So resort hotels, which we also have a bunch of, you know, I don't know what they call it. Is it revenge spending?
Yes.
After the pandemic, you know, we made a profit. I think it was over 10 times our money in Las Vegas with a wonderful hotel. And so if you're consistently in the right place at the right time, real estate, which is the second biggest asset class in the world, is a really wonderful place to be.
I remember, what was it, a year and a half ago, I think, you started talking to your businesses about the potential for a downturn and making sure that all of your companies were really kind of getting their things in order and making sure that they were ready to go if the cycle turned down, if interest rates went higher. What are you telling those companies right now? What do you see?
Well, we were right on all that. You know, we had the banking crisis you know, over the last few months, and being conservative and having good financing was the way to go. The world is changing somewhat now, as you know. Instead of really going into recession, U.S. growth was 2.4% in the last quarter. It shocked almost everyone. And so the U.S. economy is more resilient. But what's really fascinating is how much inflation has gone down. And if you remember, you know, my partner John Gray goes on your show periodically, and we've been talking early that inflation was way more than the government was reporting. I think that was true. And then we started talking about the fact that inflation was going down much more than the government thought. And we're seeing it in our companies. And I guess there was just a report of 3% inflation. That in no way surprised us. And so it looks like the Fed is actually doing a pretty remarkable job, contrary to what people might have thought. And if the inflation continues to go down, that we have full employment, then we may be able to skirt a recession.
Several big investors have looked at the downgrade that Fitch gave to the United States long-term debt, kind of askance, saying this is an odd time for it. Fitch did make some good points in why they were downgrading out of things that have happened over the last 2 decades. What are your thoughts on the downgrade and what it means?
Well, nobody expected it. That's the first. Secondly, the numbers justify it, regrettably. You know, we've had an explosion of debt since the global financial crisis, and we don't appear to have a lot of discipline going forward. We're running huge deficits now. So on the numbers, you can understand why they did it. On the other hand, as Jamie said, because Jamie's always opinionated, I must say, you know, the U.S. is the U.S. We are the reserve currency. We do defend a large part of the world, including people who have AAAs. When there's a crisis in the world, they buy our securities. Now, that doesn't last forever if you don't keep some discipline. And so, in a way, it's a bit of a shot across the bow. On the other hand, people forget it's actually a split rating. Moody's and Standard & Poor's historically have been the 2 major agencies. One is AAA, one is AA+. I agree it's not going to make a huge difference in really any way for the debt markets, but it is a little shocking when somebody just wakes up and says, I'm not so enthusiastic about your system.
Mm-hmm. You've been a big donor to politics over the years. Since we're talking Washington now, why don't we jump into that? You had said after the 2022 midterm elections that you thought it was time for new leadership. And I guess you're referring to former President Trump, President Biden. I think they're getting a little bit older. Have you made any decisions about who you're backing for this next election?
Well, I'm sort of watching the thing with fascination. You know, as I said, I think it's time for a new generation of people to take that slot. That's not the easiest job in the world. If we all watch this, and the demands on people in that position are frankly unbelievable. And I think you need a certain amount of resiliency. And when you're approaching your 80s, I'm not sure that that's the exact kind of position to be in, to have those demands made on you. In terms of myself, I'm just watching the whole thing because it's like a really amazing thing. I mean, you have I guess it was somewhere around 65% of Americans don't want the president to run, and 55% or so don't want the former president to run. Something's going to happen here, and unbelievably, if you look at where we were in 2015 at this time for the national election, the number one person was Scott Walker. The number two was Jeb Bush, talking on the Republican side. And the number three was Rudy Giuliani. And I think by the end of the second primary, they were all gone. And so we're way ahead of a presidential election. It's a year and a quarter. And my observation in America is pretty volatile. And you never quite know exactly what's going to happen, except there's always a lot of drama.
A lot of drama for sure, and I think we have more of that to come. Steve, back in February of 2019, I got to go with you to MIT, where you made a huge donation for artificial intelligence and really beefing things up because you were concerned about what China was doing with artificial intelligence and the potential for the United States to fall behind. You wanted to make sure that we didn't do that. Where are we in this race right now, and what do you think of all the developments in AI this year?
Well, what I'd say to start is that the call on focusing on artificial intelligence, starting myself in 2015 and doing that large MIT donation to start their new College of Computing, and doing something allied to that with ethics and AI at Oxford, turned out to be the right calls, because that's what's on everybody's mind now. What I'd say with AI, this is one of the most exciting developments of a lifetime. And AI isn't going to just be able to write poems for somebody's birthday. It's going to be part of everyone's life. It's going to change the way organizations run. It's going to result in an explosion of discoveries in medical science and drugs. It's going to change how education is done. It can be customized and basically be done around the world. It's going to change the profitability of certain companies. And at Blackstone, we're just totally focused on this. We have a data science department of 50 people. We have 250 portfolio companies. I just had a meeting with the 100 largest and made it clear to everybody that this is a first mover advantage kind of technology, where if we get there first with our companies, then they'll be much better positioned than somebody who shows up 5 years later. And what's interesting to me now is the major companies in this field, Microsoft, Google, others, are all not only cooperating with the U.S. government, they're pushing regulation because they really don't want bad things to happen with the rapid introduction of the technology. I think what's going to happen is you'll ultimately have some type of global regulation, something like a supranational institution that can audit what people are doing. Think about an analogy of whether it's the World Trade Organization or World Health Organization, but with more of a financial and auditing function to make sure that what people are developing really is safe.
Will China try and flout the rules, as they've done with the World Health Organization and the WTO to this point, or do you think they'll come into line too?
Well, it's hard to know. One, the West and China now have such a complex relationship that it's difficult to predict. What I'd say is that the Chinese are very concerned about this type of technology because they don't have an open society the way we do. So they're already trying to control this, and there may be an opportunity to have the world operate together on this, because you don't want the adverse things that could happen to happen. That may be a bit of a